This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup, and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jim Day, Senior Corporate Counsel at EquityZen, a fintech platform and online marketplace for investors and shareholders in alternative assets. If you're an accredited investor, EquityZen helps you access ordinarily hard-to-find alternative investments. If you are an employee or a shareholder of a privately held venture-backed company, EquityZen helps you sell your shares and unlock some of the value created by your efforts. By developing technologies that help to streamline and systematize deals implicated by the complex regulatory framework undergirding the private capital markets in the U.S., EquityZen has closed over 20,000 investments serving over 250 companies with a combined market capitalization of over $900 billion. Shares of companies such as Coinbase, Lemonade, and Spotify all traded on EquityZen's platform prior to their public debut. EquityZen was selected by the World Economic Forum as one of the most promising technology pioneers of 2020 and as a recipient of the Innovation and Wealth Asset and Investment Management Award at the FinTech Innovation Awards in 2016. Jim, thank you for joining us.
Thanks for having me, Hal. I really enjoy your show. Glad to be here.
Great. So tell us more about your background. What did you do before investing in early stage companies?
Well, I grew up in the Cleveland area, and my father is a lawyer. My mom is a paralegal. And I was fortunate that they introduced me to a number of different things, but two that seem to have stuck are they introduced me to law, and they also introduced me to the game of golf. And so I grew up golfing on a number of different junior circuits during the summertime around the country. And some of those tournaments featured people with names like Tiger Woods, who you might have heard of, or Ryan Armour from my hometown of Cleveland, Charles Howell III, people who are now playing on the PGA Tour today. So those experiences really taught me two things about myself. First, that I loved to compete at things and push myself to see how good I could get. And the second was that I, in all likelihood, did not have a future as a professional golfer. So I decided to use those skills in a slightly different way and try to leverage them to get admitted to a good academic institution, which I found great school at the United States Naval Academy, where I did get to play Division I college golf for a wonderful coach, and Pat Owen had some great teammates there. And after I graduated, I had the chance to serve on board two U.S. Navy surface combatants. The first was a destroyer that deployed to the Arabian Gulf in support of UN trade sanctions against Iraq. And one of my duties on that ship was to be the information systems officer. So that was really sort of my first professional introduction into technology and information systems. And the second deployment was on board a guided missile frigate that made 4 drug busts in a counter-narcotics mission to the Eastern Pacific. So that was enough excitement, and I decided to go to law school when I was thinking about what I wanted to do, because my parents had always sort of had law on my radar. But I knew I wanted to have a career at the intersection of law and business. So I got a chance through the Navy to work as a military intelligence analyst at the Office of Naval Intelligence while doing the JD MBA program at Georgetown. And it was really my participation in that MBA program led to an opportunity to serve as a visiting professor in an MBA program in Mozambique, where I got to teach a course in finance and entrepreneurship after I took the bar exam. And so it was really around this time, having seen a few different corners of the world in the military and through teaching, that I started to get interested in questions around capital formation and why some countries and places like sub-Saharan Africa tend to fare a little better economically than others. And I was also really interested in what makes some businesses more successful than others, and about what makes them, what about their capital structures makes them more resilient. And so when I started law practice, I looked for opportunities that touched on those interests. So I worked a bit in restructuring, working on some large, complex restructurings. I worked on the Madoff liquidation, representing the trustee in that. And I also had the chance to represent investors in early stage companies and their portfolio companies through their life cycle. And so I got to see from those representations that being privately held allowed those operators and investors to take more of a long-term view of the project that they were working on without having to worry about a market reaction to their next quarterly earning report. But I also saw instances where the illiquidity of the nature of their investments presented some real challenges, both personally and at the organizational level for the people involved. So, after I was kind of getting, after about a decade in private practice, I decided I really wanted to be part of one of these companies. And I started to work directly within corporations and technology companies. And that really led to an opportunity where I was introduced through a friend to EquityZen. And here I saw an opportunity to help create a financial product and bring services to market that I felt and still feel have the potential to at least slightly expand the overall level of economic opportunity we have in this country for all citizens by expanding access to alternative investments.
Well, great. Well, that's quite a ride there and a great experience. So what excites you right now?
There's a few things that excite me right now. First is the private markets represent an absolutely enormous market opportunity for fintech companies like EquityZen. Right now, about 30 billion in private company shares trade hands every year. That's about a six-fold increase over the past decade, but that's still only 2% of the $1.5 trillion in value that is represented by all late-stage venture-backed companies. A decade ago, the aggregate value of private U.S. companies valued at more than $1 billion, or the aggregate value of the unicorns was 53 billion. Today, that number is over 700 billion. So, why is it that so much value has now in the private markets? And that's because growth equity has basically migrated from the public markets to the private markets. And that's because private venture-backed companies, as you know, how are opting to stay private for increasingly longer periods of time. For instance, we saw Palantir recently took 17 years before it went public. That might be a little bit of an outlier, but not by as much as you would think. From 1999 to 2018, the median time for a company that went public to IPO increased from 5 years to more than 10 years. So that growth in the aggregate value of these private companies creates a huge opportunity for companies like EquityZen that can make deals happen in those company shares and make those deals happen faster, more efficient, and more reliably. The second thing that I'm really excited about is that there seems to be a growing awareness, both in government and in the general investor population and the financial advisor community, that alternative assets generally, and pre-IPO equity in particular, is one of the highest performing asset classes in the country right now. And that if we want to create a fairer economy that works for a wider swath of the population, we have to expand the level of access our citizens have to invest in the private markets, which historically haven't just been limited to those wealthy enough to satisfy the accredited investor definition, but to an even narrower subset of accredited investors that are wealthy enough to write checks of 6, 7, and 8 figures and more. So EquityZen's innovation in this space is that we have developed systems and processes that allow us to accept much smaller checks than ordinarily people can use to invest in these assets. And I think at present, we're the only major platform in this space that can accept investments of $20,000 or less. So this is a really important advantage when transacting with the shares of individual employees that might only have $50,000 or so of stock to sell. Now, at present, you still do have to be an accredited investor to invest on EquityZen, but I'm proud that last year, EquityZen was amongst the market participants that submitted a comment letter to the SEC encouraging expansion of the accredited investor definition, and the SEC, to its credit, heard those voices and now seems to be taking incremental steps to expand that definition so that more people can participate in these types of investments, allowing people with certain designations or credentials to participate independent of their net worth. So we hope that continues to expand over time, and that has me excited. And like I say, I think that this is important because just as the private markets have grown so much over the past 10 to 20 years, the other side to that story is that the investable surface area for the ordinary retail investor has proportionately decreased. Since 1998, the number of publicly listed companies has fallen from 7,500 to less than 3,500. At the same time, we've seen cumulative venture capital investments go from 11 billion to 130 billion per year. So, how the U.S. only has 130 million households. Of those, less than 10% satisfy the accredited investor definition. So we still have a long ways to go before we can say this opportunity is open to all that want to pursue it. But I feel like at EquityZen, we're at least starting to help people make steps in the right direction.
Well, that's great. So let's talk about, you see a lot of investors and a lot of startups. What's your advice for people investing in startups? What do you tell them to do before they write that check?
Well, I think that as anyone listening to this podcast knows, diversification is really important. So I think the first thing people should know is they don't necessarily have to know whether they have to pick Impossible Foods over some other food product company like Beyond Meat. If you go out and invest in a number of these companies, for instance, from time to time at EquityZen, we might offer sector-specific baskets. We call them thematic funds that allow people to, say, pick half a dozen investments or get exposure to half a dozen issuers in fintech or in healthcare or in food. If you have collected a number of these, I think that you're much more likely to succeed, and there's a number of platforms out there that allow you to do that. In private market investments, the returns tend to be a little bit more binary. We have investments that have IPO'd and produced phenomenal returns, and others have gone to zero. So for that reason, I think it's important to diversify, but there's products out there that will allow you to do that without having to get into individual issuer picking. However, if you do want to be more self-directed and you do want to pick out individual names, perhaps because you have developed a knowledge or expertise of a particular industry sector, platforms like EquityZen are out there to serve you. And if you really pay attention to these sectors and you know who the major players are, and what are the sizes of their addressable markets, you can really find some really great opportunities out there on these platforms. And finally, I think it's really important to be patient. Because the private companies are staying longer, like I mentioned, these companies have indefinite holding periods that are much less liquid than private company investments. And so this is a feature, this illiquidity aspect is something we've begun to address at EquityZen by offering our clients, in many instances, the opportunity to resell their investments on the EquityZen platform. That helps a little bit with the liquidity risk, but ultimately our platform is someone with a long-term investment horizon. It's not for short-term trading opportunities.
Right. Then on the other side of that table, what's your advice for people running startups? What should they do before they go out to raise funding?
Well, I don't necessarily have advice for the small number of other pre-IPO trading platforms that are out there. But one advice that I would give to founders and operators of startups, at least as it relates to secondary sales of pre-IPO equity, is they should really look at secondaries as an employee recruitment and retention tool. So if I were a founder, I would shy away from having restrictions in the company's organizational documents, like board approval rights, that might make it more difficult for your employees to sell their shares, because by doing that, you're effectively making your compensation package less valuable in comparison to public companies that are out there that are likely competing with you for talent. Another thing that I would point out to them is, platforms like EquityZen make this process easy. We handle the entire transaction process, saving your company the time and expense of running its own liquidity program. And we can do that without any 409A valuation impact. And perhaps most importantly, as companies advance in the life cycle, secondary trades help your company obtain a record of price discovery. And that can be useful for road shows and public listings down the road while allowing the company to retain control of the secondary sale process. So also, I think it's important to remember that places like EquityZen, when we use one of our LLC investment vehicles to buy shares of a privately held company, we sit there quietly on the cap table. We are a purely passive investor. I think that's important for founders to realize. I saw a survey that published by Sacra recently that said that half of founders have somebody on their cap table that they wish weren't there. And so allowing firms like EquityZen on the cap table helps to address that. So I would just say that these secondary sales are nothing to be afraid of, and one of the most rewarding elements of my job is partnering with the CEOs, CFOs, and legal departments of these companies to help them create liquidity programs for their employees in a programmatic way that makes sense for the companies, the investors, and the employees.
Great. Well, let's talk about the state of investing, in particular secondaries. How do you see the secondary industry evolving from here? Where do you see it going?
Hal, I think we are very much in the early innings of the evolution of trading platforms in the secondary markets. Reports that I've seen estimate the total addressable market in this space to be somewhere between $200 and $300 billion. And only about 30 billion of that, as I mentioned earlier, is currently being served. Of that 30 billion, only about 10 billion is being served by more automated technology-driven platforms like EquityZen. And the other 20 billion in secondary trades are taking place through handshake deals and emails and bespoke brokered transactions where the broker might be charging as much as a 7% commission. So I see this industry evolving to be much more automated, data-driven, and I think it's reasonable to expect that as that expands, and as secondaries and secondary trading platforms continue to gain acceptance amongst both institutional and retail investors, we will continue to see new direct and indirect competitors in this space that will ultimately drive down cost savings to the end consumer. I also think that we're going to see more private companies use platforms like ours to extend their runway as private companies to provide liquidity to their employees. And that as the adoption rate increases, we should see more standardization around how these deals are done and the documents involved, and that should make them easier to automate. So I really think we may be starting to see the beginning of a virtuous circle being formed here, where wider adoption by companies facilitates more automation, which will lower costs and facilitate wider adoption. As the data becomes more available and we have more of it, I think we're going to see more creative financial products being formed around this asset class in the form of derivative and debt instruments. And I think that the winning secondary platforms in this space are going to be increasingly integrated with large banks, stock exchanges, RIAs, RIA service providers, IRA custodians, and other members of the financial ecosystem, which is an area that I focus on at EquityZen.
Great. And so let's talk about your investment thesis. In this case, what makes for a good secondary offering out there? What would you say is the criteria that qualifies somebody to go for a good secondary?
Well, like I said earlier, I think that deep industry knowledge and having some awareness of the total addressable market of the company on the trading platform is important. One of the challenges of investing in this space, as you know, is there is not as much information made available to the investors as in a publicly traded company. So one has to get really comfortable with where that company sits. Is it the number one, number two, number three player in its space? Unfortunately, with private placements are a bit like Fight Club. The number one rule of private placements is you don't talk about them publicly. So I can't talk about any specific names in this space. But I do think I would be looking for companies, certainly the SaaS subscription model, people that have the potential to become profitable in the near term, or look like they are positioned for an exit or liquidity event within the next 1 to 2 years, as you're reading in the press, are probably the ones I would focus on first.
Great. So let's talk about the challenges in this space for those that are doing secondaries. What do you see as the main challenge starters face in setting up and running a secondary?
Yeah, well, trades in the private markets can be more complex than the public markets because there's really three sides to every one of these deals. On one side, you have employees who have relatively small blocks of stock, and they want to sell that to diversify their net worth and be less concentrated. And they also need to live. They need to buy a house. They need to buy food. So they need cash. And that's matched against investors who typically want to buy much larger blocks of stock than the individual employees are normally able to make available. So at EquityZen, we solve for that by combining the employee's investment, and we will purchase it with an investment vehicle whose membership interests are sold to our investors. So the investors aren't gaining necessarily direct exposure to the stock. So that's a bit of a Tetris problem to put those deals together. But they do have the advantage of making it easier to resell those membership interests quickly down the road in a secondary of a secondary, if you will. So, and that reduces the liquidity risk for the members of the LLC. So putting those deals together is a bit complicated. Also, unlike a typical buy-sell transaction, in every one of these, we are also very much focused on the issuer, on the company. And we want to make sure that we're making them comfortable and that they feel they're maintaining control of their cap table. And oh, by the way, those issuers or their preferred shareholders almost always have rights of first refusal that can be exercised to remove the buy side of the deal at up to 30 days or whatever they have in their documents. So that's a bit trickier than making a market in an ordinary asset, both in terms of the number of stakeholders and beyond that, we also have a fairly complex regulatory framework that is the backdrop for all of these transactions that we have to comply with. So there is a bit to it, but we're getting pretty good at this, and I think we're going to get better as time goes on.
Then on the other side, what's the challenge for the investor in engaging in buying secondaries?
As I mentioned earlier, although I don't think that pre-IPO secondary investing is as risky as seed stage or angel investing, there is an information gap as compared to public markets. So one has to be comfortable making an investment decision where really the primary pricing information is whether you are buying in at a premium or discount to the last price round. There'll be other information that you may have seen in the media on TechCrunch or what have you, but it's certainly not the level of financial disclosure that you get from buying the shares of a public company. And then the other challenge, of course, for the investor is, although EquityZen is making this market more efficient and we are at it making it more liquid, ultimately these investments have an undetermined time to exit. So people have to be comfortable with that liquidity risk, and they have to have a very long-term viewpoint. However, I think for people who are interested in startup or angel investing, that's probably not too big of an issue for them.
Great. Well, you see a lot of different sectors and applications in the market today. If you had to pick one or two that you think are really top of the stack for investors to pursue, what would you call out?
I think that there are opportunities for players in this space to create data products that can be sold to other participants in the financial markets, such as capital markets desks. I think that there is potential to expand the application of our technology to other forms of illiquid assets, which some other platforms have done by allowing people to buy fractional shares of art and other collectibles like that. So those would be two that come to mind.
Well, that's great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I guess the last thing that I want to address, in terms of a change that I have seen that I didn't really anticipate when I started at EquityZen, is the emergence of SPACs as a potential substitute for the liquidity offered by secondary market platforms. At platforms like ours tend nowadays to be much more supply constrained than demand constrained. There's no shortage of people that want to get in on what might be the next Palantir. But the emergence of SPACs at least has the potential to tighten that supply constraint a bit. And so, on the other hand, the emergence of SPACs helps to mitigate some of the liquidity risk in pre-IPO equity because they present another potential avenue by which investments on our platform might have an exit. So I don't think that SPACs are necessarily bad for secondary trading platforms like ours, but they could incentivize us to move more down market and transact in earlier stage companies than we otherwise might have. And, of course, the risk profile of investing in a B round startup is very different from investing in a decacorn that is privately held.
Right. Well, how best for listeners to get back in touch with you?
My contact information, I believe, is in the bottom of the show notes. But of those, I would say that LinkedIn is probably the best way to reach me, just searching for Jim Day.
We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks so much, Hal. Enjoyed being on the show.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.